So I'm concerned that the market is wrong and every bit of positive news is reacting in a positive way, creating pumps, even though some of the news should not be positive. Let me explain. CPI data. I think that any kind of little improvement that may well be, even if it is a 9% rate versus what the previous one was, it will create a little bit of volatility. Let me explain because I think it's important to note. A lot of things have happened in the last few weeks, a lot of market movement. We are in a little bit of an uptrend in the lower time frames, but on the bigger picture, we're in a downtrend. Probably the reason why I'm so concerned, a bit of a sucker's rally potentially could be absolute bait here for a relief rally, and this sort of news will get you. I believe that there will be a negative print for the first time in a very long time on the inflation data because the oil prices have dropped significantly. Now, important note, this probably does not mean a pivot. This probably does not mean that there's going to be a policy change. It's just how circumstances happen, right? Now let's talk about a few things. Let's look at what else is happening. This is interesting, very interesting. Let me just explain the basics. Now, it isn't as bad as the last one, as you can imagine. However, we are going to see a very decent chunk of money plonked back into the market. Basically, $739 billion is a lot. Now, remember, we are going through quantitative tightening right now. I will explain that in more detail in a second. However, this is not designed as a money printer. This is designed to essentially help people in need. We've already seen with the data, the new data that we got on Friday with the non-farm payroll, essentially giving us an insight that basically a lot of Americans are starting to get second jobs now. There's also more data about credit cards, more credit card applications are opening up. So there's a lot of things happening here because we're expecting basically Q4 to be pretty rough. People are going to be saving for Christmas, energy bills are going to go through the roof, and a little bit of positive news could pump the market, therefore lead to something bad in Q4, potentially, just putting that point out there. So I do think we are going to pump at any point, right? Let's look at how aggressive this is. Now, you can see on the chart here the Federal Reserve kind of interest rate here, and it's pretty aggressive, right? It's very aggressive. And the fact that we actually had a bit of positivity in the green side of the market, which made me laugh at some point, due to the fact of a 75 base point hike for August is mad. Now, we're not doing another one until the 21st of September. However, I do think that will be over 100. I do think that will be because I just have a feeling that they are struggling a little bit to keep on top of it. Now, when we go on to this is the next 3 dates, what we're expecting. Potentially 100 or 0.1, whatever you want to describe it as, right? So we've gone from this and aggressively getting more and more to tackle inflation, even though the inflation numbers are still going high. So that's why I'm saying if the inflation numbers come back a little bit better than expected or nowhere near as bad in terms of the aggressive growth, people are going to be screaming pivot. People are going to be screaming we're tackling it. People are going to be screaming that it's over. That's where I think we'll be vulnerable. That's why I'm concerned, right? So that's important to know. In terms of quantitative tightening, what I mentioned just before, let me just go through this. This is the thing we need to look at. Now, that's all well and good starting in June, but that is doubling in September. So just keep your eyes open for any more news on that. So you will probably see a bigger contraction of market money coming out. One other thing I want to talk about as well is the gross domestic product. Now, the fact that this has happened and the data is out, yet the market hasn't reacted to it, makes you wonder why. Again, I bring it in, concerned, suckers rally. Now, the problem that we've got with the US is they actually changed the definition because at the moment the data is telling us that unemployment rates are at the low. Labour workforce is at the highs, but it's a lag. That is always a lagging indicator. Now, we've already seen on Friday more and more jobs have been created or applications have happened because more and more people want a second job. If the music starts to stop and the media start talking and companies start tightening their belts, you can bet one thing and one thing only. That unemployment rate is going to start going up again. We're at real low levels right now, which is good, but a recession is often starting off, and I mentioned this on my Patreon, a circle. You've got a big, massive circle. You've got people with money. When they don't have money, they're not going to start spending. So if they lose their job, that's a problem. Company performance will start going bad, and that's going to create the market to contract, and therefore it's a big old cycle where people lose their jobs, and it just goes round and round and round. Because if you don't have money, if you don't have a job, if you don't have that income, if your spending habits are being absolutely battered because everything's gone up, you're not going to invest in products anymore. You're going to pull back. Get the picture? That can start at any point. So let's talk about other things as well in terms of crypto. The volatility index of Bitcoin, somewhat interesting that it's, I feel, relatively low at the moment. We've been slowly grinding, and we're in an alt season. If you watch my video on Friday, you will know that. You would have seen that in terms of we are in an alt season, a very, very clear analysis. Now, as I've said before, Bitcoin's still, in my opinion, the king. It makes the biggest moves in terms of what the basis is. If Bitcoin is positive, most of the market is, depending on how big and how aggressive the other ones are. But reality is, if Bitcoin's in a downtrend, so are we. Bitcoin, as I say, in the monthly time frames, it's doing all right in terms of a little bit of a bounce, but that could be short term, right? So volatility, I'm expecting something. Now let's talk about the market. Highlighted this before. I feel we are going to go up to this level at some point. I just got a feeling that we're going to retest that level. And I do think that this is going to be quite a meaty little level that we're going to get through. There's no point FOMOing. There's no point FOMOing. If you're in the market, as I've always described in previous stuff, like if you're holding some money in the market, you should look at places like this to take potential money off the table if you've made money. Remember, the market could humble you. Take what it gives you, right? I released a video here saying the areas that I would like to get rid of some of my spot bags, and I probably will very, very aggressively as well, essentially just because I want to try and have a little bit of more cash flow for what could happen in Q4. I want to tick a few boxes before I'm fully confident of actually deploying capital, right? So it's always good to keep as much money as possible, but also be in the market. It kind of makes sense. So my biggest concern is, and I've said it before, is people will get sucked into this kind of vortex of interest. The FOMO will start getting more and more intense. It's probably getting very, very tense now when you're watching this video. If you bought these lows and support levels or held on from a long, long time ago, if you were still in profit and you got a percentage of your bags, you should be pretty fine right now. If you are the one that was like, I'm going to buy up here, I'm going to sell down here, and be like, oh my God, I need to get back in it, you are probably underwater, struggling, and everything is a blur to you. And you're probably getting quite abusive as well to certain people. You've got to remember the game. Keep capital in a bear market, grow it in a bull market. I don't think we are at that stage where we can grow capital just yet. We can take opportunity, we can look at the data and make an informed judgment call of places where we can take profit or whatever it may be. But for me, if I was to ask an honest question to anyone, would you put a lot of money into this market right now? I think there's too many unanswered questions. I think we need to know the basis of what's happening, which is why I'm concerned. Too many people are looking short term. You need to remember, as an investing game, it's the long term. You got to play the short term game very slowly and make it in little steps. Don't just be going, we're going to make it now in 1 second. You're not. Hare and the tortoise. Keep it simple. Anyways, if you enjoy my stuff, leave a like and a subscription. And yeah, see what Wednesday brings. I may do a live on that afternoon, potentially. We'll see.